Welcome back, traders and investors. We have a returning guest here, Rachel Shasha, trader and blogger at Sassy Options, a student of psychology in the markets. Rachel, how you doing today?
I'm good. How are you guys?
We're doing great. So the market hit all-time highs on Thursday. A lot of bullish sentiment. People happy going to their barbecues. A little bit of an iffy day on Monday, but definitely had a nice sell-off yesterday. Are you seeing anything out there in sentiment that would tell you we maybe have found a little bit of a short-term top here?
Um, I don't know. I mean, in terms of sentiment, I wouldn't say necessarily. I also don't necessarily know what short term means. I don't think that we go hit 2000 right now before we go a little bit lower. But I think that a bounce for the next couple days wouldn't be unheard of. There would probably be a lower high if I had to guess.
Okay.
And maybe some more selling, but not heavy. I don't expect a lot of heavy selling right now.
Okay, the Momos have really taken it on the chin the last couple days. Had some washouts yesterday. Is this something there? Do you have a stable of stocks that you follow, or do you just have your chart patterns and you wait you let stocks fit the chart pattern and then you trade them?
I would say both, but like I talked about last time with you guys, I do a lot of looking at open interest. And so I always look at the open interest of those momos, just to kind of give me a gauge of where the market's at and where sentiment is at. And prior to this week starting, and then especially yesterday morning, I noticed that there was a lot of calls being bought. So people were just buying the dip, and I tweeted out something about, it's looking a little frothy, and I think it's more risk off, just because too many people were expecting that dip on Monday to be meaningless. And I think now, just working off a little bit of overbought condition, I think it's actually healthier, this pullback, than anything.
Which stocks do you focus on out of the momentum stocks when you're looking at open interest there, Rachel?
So when I look at open interest, I look at Apple, Goldman Sachs, Netflix, Priceline. I look at the NASDAQ, the Qs. I look at what else? Baidu, Amazon. Those Google, the big ones, Facebook.
Okay. Do you now? You're looking at the open interest here. Are you looking at just the weeklies? Are you going out a little
Good
bit far?
question.
Yeah, that
Good
that's.
question.
Go ahead.
So I look mostly at the weeklies. However, when it gets to about now, so starting this weekend, I took a peek, and I don't concentrate as much, but I took a peek at what the monthly looks like, just because it's coming up. And oftentimes I do think that, if I see, like, I'll look at, just in general, the SPY open interest, I do feel like it makes a difference where that's at for the month. So maybe not so much in the beginning of the month, but as it gets closer and closer to options expiration, the monthly, I definitely take a look at that and see how far we are to, highest open interest on both sides.
So, are you looking for the street to squeeze? Keep those people out of the money, or are you looking because of high open interest there that it's more to migrate to that price and put the options in the money as opposed to out of the
In the
money?
money. It depends. If there's one big strike on the put or call, oftentimes it will act as a magnet, but that tends to not happen. Most of the time, you see, like it's skewed to a high strike on the put side and high strike on the call side, or just one, but several on the call side. And usually, when I see that, I do not think price will go over it. So this weekend, I posted a blog and I showed the SPY open interest for the weekly. And I said I doubt it would get over this 199 200 because there were just too many calls there.
So keep
And
the
so, and
yeah.
usually on the call side, it will act as a wall. Usually,
Okay, and are you just doing outright options, straight puts and calls? Do you like to do spreads? Are you shorting premium? What's your preferred method of trading?
currently my preferred is just straight calls and puts. The volatility is so low right now. Premiums are so cheap. I'd rather just keep it simple, try to make a quick buck and then be out. And, a few years from now, maybe, or, in a couple years, I don't know, whenever volatility picks up and premium is higher, then I might become a seller again.
Yeah, when the VIX is so low, it's almost better, it seems like, to be a net buyer of calls and puts as opposed to sellers, or unless you're picking on the stocks that have the huge premiums, because the premiums just aren't there and protection is cheap.
Exactly.
And also, like Apple, you said you were looking at the open interest in that. Can you glean anything from? I mean, we are Wednesday here from what you're seeing in Apple. Are we poised to go back up to all-time highs?
So Apple is interesting because it tends to not go over its highest call open interest unless it does it very quickly in the beginning of the week. Now, it could shift because Apple is no longer, a $600 whatever stock. It's now less than 100, so, sentiment might be different and the open interest might change. But so far, it's still stuck to it. This before the week started, Apple's highest open interest was around 95, and it got way past that. And so, like I said, if it happens in the beginning of the week, it shifts off. The open interest often shifts, but it's still at 95, and it's pretty high now. So I don't know. I mean, it's over 95 right now in pre-market, and it's still Wednesday. So if it can stay above 95, and people start to close out those 95s, and move them forward or roll them out or whatever, then yeah, I think it could definitely stay over it. But if it doesn't, if it starts like hanging out around this or it goes a little bit lower, I don't know, then I would say it probably closes around 95 or below on Friday. Except for maybe the last 20 minutes, it'll do a little push at the end of the day.
Yeah. Do you trade around your options positions with the actual equity when they're getting around of a strike price? Let's say you have the 95 calls and there's still some nice juice in them. Will you use the stock to scalp in and out of your position, kind of lock in some profits?
No, not if I'm doing just trading. Like, I pretty much only use equity for investing, but I just use the option.
Okay, so
I just rather, like if I have the profit and I think it's going to go down, just get out.
okay, all right.
The Apple options are probably so liquid too. It's so easy to get out in and out of them. Like if you're in
Very.
exactly, if you're in some thinner ones, I know like sometimes I play some of the illiquid options there and they're real hard. And
Yes.
sometimes I actually have to go in and sell the stock against my call to lock in the profit
Right.
because I can't. There's no bid on the call, so or the
Right,
bid's way
like
below
CMG,
intrinsic value. Yeah.
like CMG Priceline, those are very hard. Like those normal ones, they're hard to get in. They're hard to get in. You have to really I'll have to put in a limit order and just see what happens if I'm going to use those.
Right, they're not. I'm going to ask you about a stock here, and it's not really a Momo, but this GM here, boy, it's just kind of hanging out here at this $38 level. It's had a lot of news and just can't break above. It's had a nice rally here. Can you see anything from the chart or from the open interest in this, or are people just loaded up on the 38 calls, waiting for this thing to break out, or do you see something in there that would tell you that this $38 is going to hold up for quite some time?
Well, I don't tend to look at open interest. I mean, I'll look at it right now for GM, but I don't tend to just because I don't feel like on the less popular stocks that it makes much of a difference. I think that it just doesn't have as much of an effect from what I've seen. So I really look at the open interest on those. I mean, I feel like I don't know. I feel like if anything, it's more bearish than bullish, even though it looks like it might be setting up to go higher, and it could go higher. But in general, the 200 days above the 50-day, and even though the 50-day is starting to curl up, I don't know. It's just, I think a break of the 10, and I don't know, it might be toast. I don't know. I don't really like TM very much.
You don't like that?
Who knows with all the news that keeps coming out?
Yep, good point.
Headline risk.
Yeah.
A lot of headline risk in GM, so I agree. I try to stay away from the stocks that are really, having headlines here every other day because it seems like technicals just don't matter when there's, headlines coming out all of a sudden, another recall, and you like this chart set up and it falls a buck because of another recall. So it's tricky.
I'll say one thing too about just this market in general and like where we're at. It's I have not been buying a lot of puts, and like right now, yeah, it would have been great if I bought puts on Monday. But it's always easier in hindsight for puts, I feel like, because in this market, first of all, these snapbacks are so violent sometimes,
Yeah.
and you just get shaken out of your position so fast, or and the premium dries up so quickly. So, one thing I've been doing the last couple of days, for the most part, is just sitting out. Maybe trying a couple things here and there, but I'd rather just wait till I think there's a good buying opportunity. I tried buying. I'm holding it right now. I don't know how long I'll hold it, but I bought Facebook yesterday at the 50-day. Just options, call options, just because, I know the 50-day doesn't always work, but it tends to at least the first time with Facebook. And I think Facebook has strong fundamentals and probably is something people, want to own before the earnings come out, or, it's definitely an institutional stock. So, stuff like that. So I'm doing small stuff like that, but I'm mostly just waiting because I don't know where the market's going right now.
Yep, and play it as it comes. Okay, one last question for you, and you talked to us about this before, and you kind of had it was kind of like your secret sauce was
The GS.
Yep, exactly, exactly. What?
Let me tell you, you know what? It's been working. It's been on. GS this week has way more calls, and I looked already for next week, and the 170 strike is pretty strong. So I would venture to say that we are not going over 170 before next options expiration. And if we do, I might want to buy puts.
Okay.
I don't, and that also tells me that the market's not going to be super strong. So I would be surprised to see the market get over highs before options expiration next week.
Okay, that is a great outlook for the market, Rachel. And it's funny you remembered that indicator. But another important thing is that you're pointing out to our traders is that you have things that work for you, and while they're working for you, you'll use them and use them and use them until they don't work, and then you do your research and you try and move on to something else. So I think that's really important in trading is being adaptable and finding different things that work at different times. Well, thanks again for being on, Rachel. Have a good trading day.
Thank you for having me.
Yeah, and we hope to talk to you again soon.